Good afternoon, all. As mentioned, this is already the ninth in our series of What ESG Investors Want, a webinar and a format that gives you direct exposure to the views and preferences of thought leaders on the buy side. Today, we're joined by three such thought leaders: Anna Aparkina from Deca Investment, Fabian van der Meij from Actium, and Karin Göransson from Handelsbanken Asset Management. And today we'll be focusing on the key ESG themes looking ahead in 2022. We'll talk about the implications from the recent COP, what that means for corporate decarbonization. We'll talk about the rise of sustainable taxonomies, and we'll talk about also growing concerns around greenwashing risk. In terms of the format, my colleague Daniel Bressler and myself will run through a number of questions that we have for the panel for the next 30 minutes or so. And then at the end, as per usual, that there will be around about 15 minutes of time for Q&A. So let's get straight into it. The first topic, the post-COP26 expectations, turning pledges into action. Fabian, perhaps starting with yourself, COP26 ended with a wide array of environmental and climate pledges. From your perspective, how will these Glasgow agreements affect your investment decisions going forward?
Thank you, Arthur, for that. I think in general, what we have seen from the COP26 is some people saying it is a bit less than expected. But what I see and what I expect is that a lot of those initiatives will be translated in national legislation. And from that side, it will be impacting our investment decision. So an example, maybe that's not directly related to COP26, but what you see in Germany now with the new German Climate Change Act is that there's expected that a lot of utilities have to put in more capex than expected or sooner than expected. So they have to make the pace a little bit higher to stay adaptive. And so that's one thing, to stay adaptive. That's important to stay in your universe. But another thing is also from a financial perspective is that the capex increases, so that also impact the financials of those companies. So from those two sides is the question: how much and when, and if those companies are still have good financial ratio to stay in at that moment. So that is impacting directly our investments going forward in the next few years.
Great, thank you, Fabian. I mean, certainly a key theme, a key pillar of this year's COP was also the role of finance, and indeed green finance, as you explaining in meeting the climate change emergency. And I guess reflecting on that, Karin, Handelsbanken Asset Management, you've made a 2040 net zero commitment. How does that type?
Yes, we made a commitment to be net zero at the latest 2040. But even more important is that we have set 2 interim targets by 2030 and how to get there. This is something we think is very essential. When we invest in companies that have set similar targets, we think it's really important that they set interim targets. So we need to focus not only at 2040, but at years getting there too. And we will become net zero by reducing the carbon intensity of our portfolios by 50% and doubled our investments in climate solutions. But given that we had for a long time have had a restrictive approach to fossil and now exclude them from all our portfolios, our carbon reduction will come from the reduction of carbon footprint of the companies in our portfolios. We will therefore have a strong focus on engaging with issuers in high emitting sectors, but also at the same time continue to focus on investing in solutions to climate change and to support the transition to net zero. And I'm sure that there will be no shortage of interesting investment opportunities going forward to meet these kind of commitments.
Thank you. And perhaps turning to you, Anna, I mean, Karin referenced there are indeed quite a few companies now that have also made net zero commitments, and certainly that number of companies has been increasing in the run-up and indeed in the aftermath of COP26 as well. I mean, that's a starting point, right? A company to make a net zero commitment, but from a DECA investor or indeed ESG investor perspective, what more are you expecting from those firms looking into next year?
Well, I will not be much different from what Karen already mentioned. She mentioned that her company is setting interim targets that they want to achieve on the way, and that's what we expect as well, to see a credible strategy, how the company is going to get there. And we want to see how they're planning to finance this transition. We would like to see impact on their overall strategy and financials, if they can show this. And of course, we would like to see regular reporting on their CO2 emissions. And if not all CO2 can be removed, then there will be some offsets used. Then we would like to see information on credible offsets. But there are multiple of initiatives out there going to help the companies in this in this way. And for example, the climate pledge already mentioned is one of them. Science-based targets is the other one. And there are actually, from the financial market perspective, there are instruments in the market that can also show the company's commitment, like sustainability-linked bonds, if they are capable of issuing those, where the companies can also set these targets, and they will be financially involved with achieving these targets. So I guess that there are already some instruments set up in the industry which can help the companies on this way.
Great. As you say, there's no shortage of tools for companies who are serious about this agenda. I mean, we focused thus far on climate, but I think another interesting element of this year's COP is that we've also seen a move towards other environmental priorities and goals, particularly thinking about natural capital in the Get Nature Positive pledge. And Karen, from your perspective, how will these types of commitments influence your evaluation as an ESG investor?
A lot, of course. We believe that when companies work with nature positive approaches and put nature and biodiversity gain in focus of its decision making, it will benefit early movers with new business opportunities and improve their standing with investors. These are the kind of investments or the issues that we are looking to invest in. And the pledge that focus on nature-related questions and biodiversity are, of course, of help and interest. Still, we need to evaluate them and make sure they actually lead to the right things. Many of the pledges tend to be very far away in time, and we call for the investors to set interim targets and concrete measures so we are able to do follow-ups. And nature is still very complex, and I guess the market and the scientific expertise needs to work together to make sure that we will have a shift in financial flows toward nature positive outcomes. We have already noted that several companies work together on these issues to spread knowledge. As an example, we have several companies in the Nordic mining industry to have joined forces to collaborate and exchange experiences on biodiversity and nature. And we very much look forward to seeing more clarity in these questions, as we believe they are very important. And hopefully TNFD and science-based targets for nature can bring some very soon. But of course, nature can't wait. And I mean, we do have a large focus on these questions at the moment within Handelsbanken Asset Management.
Thank you, Karen. An interesting example that you're highlighting in terms of collaboration within the Nordic mining space. Anna, from your perspective, were there other elements of this year's COP that you thought were particularly interesting and impactful that you wanted to highlight?
I would like to say that it's good to see more and more emerging markets issuers and emerging markets countries joining. Maybe they cannot be as ambitious as developed market issuers, but it's already a good step. There is no transition without the South, so to say, without the emerging markets. So it's a very positive development, but of course, we need to see more.
So thank you. That takes us to our second topic, taxonomy. So let me hand over to Dan.
Great. Thank you very much, Arthur. Okay, so we'll shift a little bit to get your views on the expectations for the upcoming sustainable taxonomies, knowing that right now the EU is debating their taxonomy and that we expect the UK to have their sustainability taxonomy in the near future. So focusing on the EU taxonomy, Anna, in 2022, corporates are going to start having to disclose their EU taxonomy eligible activities. What would you like to see from those corporates when making those disclosures?
First of all, I take a disclaimer that whatever I say now may be different in a year or two, because this is a very new and evolving process. So we will know better as we see it. But still, I would like to say that in the format, if I had a choice where to see the disclosures, I would prefer in a separate sustainability report versus the annual report, because somehow I feel that the information gets lost on the way in a larger document, non-specific to sustainability. As given by regulation on company level, I would like to see the share of turnover, CapEx, OpEx compliant with the taxonomy. We would like to see companies' disclosure on the company level, how they consider sustainability in their economic activities. We would like to see information on transitional and enabling activities. And one more wish is on the project level, we struggle a lot separating reporting for companies on the company level and their labeled securities. So the disclosures on taxonomy compliance of green or sustainability bonds that company has outstanding separately from the company level, that would be also really helpful for us. But as I say, we will know better when we see it. For example, I don't know, second party opinions also evolved over time. And with the time I knew better what I want to see there. So I think that the same process is awaiting us with regards to taxonomy reporting from the companies.
Great, thank you. And I guess that's a good caveat to include as we talk about these questions, that we understand that this will be an evolution in thinking. So focusing on, how will issuer alignment to those taxonomies be important or maybe not so important for inclusion in the funds at Actium?
Yeah, I think that it's important that there's an alignment with EU taxonomies, but don't forget that the time horizon is very long. And what we also look at is to the ambition levels, how quickly and in what horizon the companies are able to include those alignments in their policy. So I think the key point to make here is ambition of the issuers, and how big the ambition is. That's the key question. How we incorporate the issuer in our universe. So, for example, if I may, I also look to sustainability-linked bonds, SLBs, and there you see a lot of difference between ambition levels. And we think that if you're really looking to the issuers, to the SLB issuers, just ticking the dots and saying, yeah, that's correct. They are in line, they are aligned, but we also look what the ambition level is and how much they can increase their commitments, as to say. So therefore, for example, if we look to the difference in GasUnie, for example, we like that SLB, and we think there's quite an ambitious, but another one we think that can do better, and they still are, for example, pay up a higher coupon if they not met their targets. So we think that you have to split those and to say if they are both liable to not getting their targets, and the one is in a lower ambition level, it makes it easy. So therefore, we say those parties we scrutinize a little bit and give not an internal stamp as an SLB. So not a direct question to your answer to your question, but I think that's the way we look at how the taxonomies come in play in our investment universe.
You understand the focus on the ambition is important at Actium, and I guess sort of pivoting on that point a little bit, Karen, from your perspective, do you think in the future that ESG funds in your asset management company would still be able to include non-taxonomy aligned issuers or non-taxonomy aligned activities?
Yes. Like everybody else, I guess we look very much forward to have the taxonomy finalized, and they will be definitely of great help in our work of finding interesting investments. But we will use the different taxonomy as an important element in our decision making, but it doesn't mean that we will only buy taxonomy aligned bonds. We believe that activities that are not included in the taxonomy could still be relevant to sustainable investments. And we will continue to rely on our internal process, and we will continue to make a thorough review of the company and its overall sustainability work. It is very important for us that the overall sustainability targets are in line with what they are about to finance with the green, social, sustainable, or sustainability-linked bond. However, we find that the taxonomy will likely be a value driver for those who score well in the relation to the framework and are likely to affect what kind of information investors look for. So we will use the taxonomy as a starting point and a great tool, but it's not definitely all.
Yeah, understand that it might not be, the end point for everyone. So back to you, Fabian, that there will be, multiple taxonomies coming out and maybe differences between the EU's taxonomy and the UK's taxonomy. How would you expect the market to respond to those differences between the different taxonomies?
Yeah, I think that's an interesting question also because there's a lot of talk about the EU taxonomy. Will that also only be in the EU adopted or also abroad, worldwide? Let's say there is now a lobby or a discussion to include nuclear energy in the EU taxonomy. I think that there's an interesting point from this perspective, and that is, I think the views differs under sustainable investors how they approach this topic. So I think a lot of sustainable investors are a little bit cautious with this energy source. We as Actium think it's an adaptive and also in the transition we think it is a usable source for the whole topic. But of course, if it's not included in EU taxonomy, it means that your sustainable funds have an issue if they include this. So that will impact. So therefore, there can also be difference between the EU taxonomy and the UK taxonomy, but also other taxonomies in the world, as to say. But in general, I think that sustainable investors are a little bit more cautious, more strict, and therefore the impact will be limited between the different taxonomies.
Interesting. Anna or Karen, do you have any other thoughts on how you would be handling the differences between the taxonomies, or agreeing with the view that ESG investors are a bit more cautious than the taxonomies might be?
No, well, both yes and no. But I mean, different countries have different starting points, and we have a global sustainable fund, and I mean, we need to make sure that the investments are taking into account the taxonomy in the different part of the world. So of course, it's easy for us here up in the north to sit and say that everybody should do the way we do, and that won't work. It doesn't make sense. So we will look at each projects and go through which starting point they have and continue.
Great. Thank you very much for your thoughts on the taxonomies, and now I'll pass it back to Arthur to go through the third topic for today.
Thank you, Dan. We've kept the spiciest topic for last, which is greenwashing, incorporating learnings from the past year. And indeed, on that topic, Karen, there's clearly been increased scrutiny around green investment funds and the claims that they're making. In that regard, do you think that holdings of green bonds or sustainability-linked bonds pose a bigger greenwashing risk?
Yes, there has definitely been an ongoing discussion about greenwashing, and I have to say, in some way, I agree that there is a bigger risk of that in sustainability-linked bonds. Perhaps, as we already mentioned, it's difficult to analyze the issuer's KPIs to really ensure that it is not just business as usual and that the issuer is really trying to make a difference. Ambition is the key. And we prefer when the issuers in an SLB don't have too many or too complicated targets, rather focus on a few very good ones. So keep it simple, and above all, it's important that the KPIs are very central to the issuer's business strategy and in line with their overall sustainability work. But we think it's of great interest to be able to invest in these kind of bonds in companies that don't yet have a large green asset pool, or are trying to improve, or are in a transition to be more sustainable. And it certainly opens up for new sectors. And about the KPIs, I guess the greenhouse gas emission reduction targets are the most frequent ones that I have looked at. And I guess they are the ones that's easiest to compare. And obviously, we like them to be scientifically verified.
Thank you. We certainly like the keep it simple principle to avoid creating overly complex ESG propositions for the market. And I guess, Anna, we've spoken a little bit about the instruments here, but of course, this more generally applies to corporate level disclosure as well. And I guess when you're looking at DECA ESG funds, what kind of information do you require from corporates to sort of help you deal with possible greenwashing accusations?
Yeah. First of all, I want to describe a little bit the kind of environment we're operating in. DECA Investment is an asset manager for mostly German savings banks, Sparkassen. So we have mostly mutual funds offered to private clients in a savings bank. And I do not have any data, but just judging by the headlines, Germany produces the biggest amount of greenwashing headlines, in my opinion, just because we stand in under such scrutiny from the public that we're quite defensive in setting our filters, and we have quite a dogmatic ESG team. And I think there are a couple of reasons for that. First of all, German public is very engaged with the transition, and in my opinion, there are two ways of doing it: either doing it perfect or doing it fast. And we in Germany were about doing it in a perfect way. So probably in the Anglo-Saxon world, it will be a bit different. But for us, it's about doing it in a perfect way. Thus, my ESG team will not allow me any investment until the company has thorough coverage by recognized ESG rating agency, including rating, but also further information. We do not look at the label securities unless they have an SPO from a recognized agency, and plus the ESG coverage from a rating from ESG rating agency, and even then, every labeled security will be looked at by our ESG team, looking at their contribution to the Sustainable Development Goals. And we're also quite strict about impact reporting. It's not like we completely do not do any investments in our impact fund that do not provide reporting, but we want to have the absolute majority of the issues we invest in providing reporting, so we can have thorough reporting on our side for our fund, impact reporting. Thus, impact reporting is very important. The presence of SPO for labeled securities is very important. But in our impact fund, for example, we also invest in non-labeled bonds from pure play ESG companies. And there it's less straightforward with the reporting than for labeled securities, where we have impact reporting every year, or like 2-3 times at least after the new issue. And we would really welcome and wish for SDG relevant reporting from the companies that are ESG compliant by the nature of their business. And that would be really helpful if we could improve as an industry in this regard. But I'm sure with all the upcoming reporting regulations, that will be the case.
Great, and this is something Karen touched on, is around the different sectors that have started accessing the sustainable finance technologies, in particular on the SLB side. And an interesting sector in that regard that we've heard more from is the hard to abate sectors. And thinking about those, Fabian, how would you assess them if they were to come to market with a sustainable debt instrument? Be that aviation, be that oil, be that another such sector.
Yeah, thanks, Arthur. I think that in this is a very crucial item. I think that on the one hand, it's important to make able companies who are less sustainable, as to say, also to move on and to change their direction. And also from that perspective, I like that they also now have the opportunity, for example, that they are able to issue in the SLB market, for example. On the other hand, I also think that sustainable, we have to be very critical on what's sustainable and what's not sustainable. And from that end, there always be companies or sectors, subsectors that will not be able to jump on this wagon, as to say, or they cannot move that quickly, or they are not able to move out. For example, we all say, or all, I think in general, some industries are like the tobacco industry, are very difficult, to move on, and they try, but they are in a corner of the universe that is not very favorable, as to say. So therefore, I think we have to be critical as an investor. But for example, there are also good examples that try to move on, to move out. So I know there's a lot of discussion about oil and gas companies. But Eni, for example, was, in my belief, that was the first SLB from the oil and gas universe. And what they're doing, they just they have their change. They want to change their business, and it takes a long time. But at least they are have some clear targets on that, and they also put that in an SLB framework and issued a bond from that. So they address the issues they cope with, and on those targets they issue a bond. So I think there is room for that, but they still has to be above average in that way.
That makes sense, and particularly in light of, as we discussed, the growing focus around greenwashing, and of course it's one that regulators are very focused on. We spoke about taxonomies, but of course another critical new piece of regulation that came into force this year is the Sustainable Finance Disclosure Regulation, SFDR. And certainly our surveys have found that that's considered one of the most impactful pieces of regulation affecting the buy side at the moment. And I guess, Anna, from your perspective, how does complying with that impact how you evaluate issuers or indeed other investments?
Well, first of all, it has a huge impact on our ESG team. We see how much investment in human resources, data, and reporting capacities is done. But yeah, as I said, in Germany, we like exclusions a lot. Thus, I would expect that based on the reported PAIs, we will see even more exclusions for us, lists of companies that we cannot invest in for our ESG funds or impact funds. What I also see that there will be more strict filters for our exactly impact funds. And following that, I would see there will be a lot of reclassification of funds between all this Article 6 for non-ESG funds, 8 for ESG funds, and 9 for impact and thematic funds, because we will not be capable of complying, for example, with the stricter regulation. There will be, we would like to have as broad as a portfolio manager in general, forget the ESG part, we would like to have as broader investment universe as possible. But the regulation will, in my opinion, impact it to the restrictive side. And we will be probably reclassifying some funds, although it goes a bit against of what our investor wants. In Germany, first of all, the investors, the retail investors are very interested in ESG funds, but more interested in the exactly thematic climate impact funds, and we will be more reluctant to offer them pure Article 9 funds because it's too difficult for us. I think the asset managers will be more defensive there. So as to how exactly it will influence our evaluation of issuers and bonds, I cannot concretely say now. I just see these general trends for the funds, and we will find it out as it comes, I think.
Thank you very much, Anna. Fabian, I think you unmuted yourself. You also have a point when it comes to SFDR.
I was not on mute, but hi. So no, I think that what I want to say is that I'm reacting maybe also what I think Karen was saying also about keep it simple. I think it's also interesting to see the other way around. We have seen some issuers that has a really good, for example, sustainable framework in their company, but then make it simple on the SLB side. And then it lacks a little bit of ambition on that side. So I would say make it as simple as possible, but not too simple, because also the ambition on that side is very important. So I think that I want to highlight. I find it more important than the other.
Thank you. And that concludes the discussion also on greenwashing.